Hello, I'm Martin Smith and this is your UFX Markets Week in Review. Today we'll cover some of the major events of the past week and discuss how they impact the global currency markets. The euro reached its lowest level against the US dollar in almost 2 weeks as the International Monetary Fund cut its growth forecasts. The euro declined after Standard & Poor's cut Spain's credit rating and then increased on speculation that Spain will seek aid, spurring a stimulus program. European leaders will hold a 2-day summit in Brussels on October 18th. Managing Director of the IMF stated that Greece should be given 2 years to meet fiscal targets and that the recommended debt reductions are needed before a 130 billion euro bailout of the nation can proceed. The Federal Reserve began a third round of debt purchases to spur the US economy, and the European Central Bank announced an unlimited bond purchase program to stem the debt crisis in the Eurozone. The euro was last trading at 129.49, an increase of 0.20%. The Australian dollar rose as gains in commodity prices increased demand for the currency and on speculation that China, the nation's largest trading partner, will take steps to stimulate slowing economic expansion. The Chinese economy grew 7.6% in the second quarter from a year earlier, which is the least in 3 years. The Australian dollar was last trading at 102.30 against the US dollar, a decrease of minus 0.25%. Oil declined after the International Energy Agency reduced its forecast for global demand, saying that slower economic growth could limit fuel consumption. Prices fell after the IEA reduced outlooks for 2012 and 2013 by 100,000 barrels a day, each from a month earlier. The oil price increased previously as rising Middle East tensions heightened concern that supplies will be disrupted and as US consumer confidence unexpectedly rose. Oil was last trading at 91.86 a barrel against the US dollar, a decrease of minus 0.23%. Gold also declined, its biggest daily drop in more than 2 months, as improving consumer sentiment in the USA and jobs data increased speculation that the Federal Reserve might curb the monetary stimulus that has boosted gold prices. The gold price fell after data indicated that US consumer sentiment unexpectedly rose to a 5-year high. Weekly US jobless claims indicated a surprising drop, with increased evidence about a stronger labour market after the unemployment rate fell to 7.8%. Gold was trading at the level of $1,753.68 an ounce last Friday, a decrease of minus 0.76%. Well, that's all we have time for today. I hope you've enjoyed this week's review and you'll join us next week. Until then, be sure to visit us at ufxmarkets.com for all of your online trading needs. For UFX Markets, I'm Martin Smith. Good luck and happy trading.